Hi, and welcome to Edolab Markets. Today we're looking at how the market hunts liquidity, using Edo Liquidity Sweeps. A liquidity sweep is when price pushes just beyond an obvious high or low, triggers the stops resting there, and then snaps back the other way. It's the classic stop hunt. The market reaches for fuel above a high or below a low, takes it, and reverses. On Goldman Sachs Weekly, every dotted line is a level the indicator is watching, and each sweep tag marks the moment price grabbed that liquidity and turned. Instead of guessing where the traps are, you get them marked automatically. First, where does that liquidity sit? It pools around swing highs and swing lows. Above a swing high rests buy-side liquidity, the stops of short sellers and the orders of breakout buyers. Below a swing low rests sell-side liquidity, the stops of longs and the orders of breakout sellers. The indicator tracks the most recent swing levels and draws a dotted line at each one. On Qualcomm Weekly you can see them stacked above and below price. Those lines are the pools. A sweep is what happens when price dips into one. A bearish sweep happens above a swing high. Price wicks above the old high, grabs the buy-side liquidity, but closes back below it. That failure to hold the breakout is the tell. The buyers who chased are now trapped. The indicator marks it with a red sweep down tag, right at the candle that did it. On Exxon Weekly you can see these red tags at the tops, where a push above a prior high was rejected within the same week. A bearish sweep is a warning that the high was a trap, not a breakout. A bullish sweep is the mirror image, and it happens below a swing low. Price wicks below the old low, grabs the sell-side liquidity, the stops of the longs, and then closes back above it. The sellers who broke down are trapped, and the indicator marks it with a green sweep-up tag. On Platinum Weekly the green tags sit right at the bottoms, where a dip under a prior low was bought back before the week closed. A bullish sweep says the low was a trap, and demand stepped in. A sweep on its own is just a hint. The indicator waits to see what price does next, and either confirms it or not. A bullish sweep is confirmed when a later candle closes above the high of the sweep candle, follow through in the swept direction. When that happens, the tag gets a check mark and the dotted line turns into a solid, thicker line. On the New Zealand Dollar Weekly you can see confirmed sweeps where price grabbed the low and then pushed on, the level held. Confirmed means the trap worked and price followed through. That's the one you want. Not every sweep works, and the indicator is honest about it. A sweep fades when price closes back through the other side, the reversal it hinted at simply didn't come. The tag gets a cross, and the line turns gray and dashed, marking it as a failed sweep. On Avalanche Weekly you can find plenty of these, crosses where a sweep looked promising and then price just kept going the original way. The fades keep you honest. A swept level that fails is telling you the pressure is still in the other direction. So every level moves through 3 looks, and you can read the whole story from the lines alone. A fresh sweep is a thin dotted line with a plain tag, liquidity was taken, and we're waiting. If it confirms, the line goes solid and thicker with a check, the sweep worked. If it fades, the line goes gray and dashed with a cross, the sweep failed. On FedEx Weekly you can scan left to right and see solid lines where sweeps paid off, and gray ones where they didn't. The panel in the top right corner keeps the running count. The top line is the last sweep, color-coded, so at a glance you know whether the most recent event was bullish, bearish, or a fade. Then 3 totals across the visible sweeps, how many are still detected and waiting, how many confirmed, and how many faded. On Eli Lilly Weekly the panel tells you the balance at a glance, more confirmed than faded means the sweeps here have been reliable. Read the last line for the latest event, the totals for the track record. Let's open the settings. The most important choice is the profile. It sets how big a swing has to be before its liquidity is tracked. Scalper reacts to small, fast swings. Swing is the balanced default, and long-term only tracks the major highs and lows. On Nucor Weekly, moving to long-term thins the chart down to the big levels, cancel puts it back. Match the profile to your timeframe, faster for intraday, slower for the big picture. The rest of the settings are presentation. You can set how many sweeps to keep on the chart, and the colors for bullish, bearish and faded events. Label size and a dark or light theme to match your chart, and the panel's corner and size. On the technology sector fund the defaults are clean, tweak them to taste. Nothing here changes the logic, only how it looks. Finally, the alerts. You reach them from the Create Alert dialog. There are 5, a bullish or bearish sweep detected, a bullish or bearish sweep confirmed, and a sweep faded. So you can be told the moment liquidity is taken, or wait for confirmation, whatever fits your style. None of them is a buy or a sell order, they simply mark that a condition was met on the closed candle. Edo Liquidity Sweeps is free and open source. You'll find the full script on TradingView, and everything else on our website, www.edolab.io. Structure before signals. This is Edolab Markets, and we'll see you in the next video.